To thank you one-to-one for inviting me back to speak about lithium and then moderate the following panel. I'm Howard Klein from RK Equity, and I've been advising lithium companies and investing in lithium equities since 2009. After a very positive experience in the gold space in China, my friend Jay Shemalaskis asked me to help promote his next venture, which was called Western Lithium, which was spun out of Western Uranium, which had just raised $50 million during the last uranium boom. Obama had just been elected. Sometime before the end of the current Biden presidential term, that is 15 years later, that unconventional sediment lithium project, now called Thacker Pass, should be fully funded. At more than $3 billion for 40,000 tons of capacity, it is the most ambitious and highest CapEx greenfield lithium development project ever attempted. $75,000 capital intensity per ton. General Motors will own 30 to 40% of Lithium Americas, the company that's building this project, and will take 100% of the offtake for the first 15 years. This is pretty incredible. A US auto company getting into mining and processing, just like in China. Uncle Sam, through the Department of Energy, is lending a giant $2.3 billion to fund this project at the lowest cost of capital imaginable, US Treasury rates. Similar to China soft loans for some of its industrial champions. Government Motors Lithium. Before looking forward, let's take a look back at what I said at this conference over the past 2 years. In October 2022, my title was Lithium, Bound for Glory, quoting the Tedeschi Trucks Band, for those of you who like them. I quoted Elon Musk then promoting software margins from lithium companies and encouraging more lithium production. 9 months later, I was here again in June 2023, exactly 1 year ago. I talked about the roaring 2020s lithium bull, Lithium Rush 3.0. The RK Equity Lithium Equity Scoreboard, which I'll show you later, has grown or had grown from 50 to 150 companies. There was no doubt an oversupply of lithium development opportunities. That I got right. My partner Rodney Hooper, who presents in London for One-to-One, said a structural deficit in battery-grade lithium is here to stay for the remainder of this decade, and that prices will be stronger for longer. We have been wrong about this for the past 12 months, though we did caution that rallies in equities to all-time higher love, to recall Steve Winwood, can often dissipate into 30, 50, and 70% retracements. But we didn't expect things to happen so soon and so hard. I was wrong in September 2023, having just seen the Eagles at Madison Square Gardens, to suggest that lithium would take it to the limit one more time. I had expected buoyant year-end EV sales and a seasonal year-end equity rally, as has occurred in some other years. Instead, the lithium price recovery that happened in Q2 of last year reverted downward and fell very far, very fast. The main explanations? Oversupply from lepidolite in China, controlled by battery OEMs, and spodumene from private African companies financed by China, but also in under-demand due to China having overbuilt battery production. There's a lot of hidden lithium inventory inside these batteries. The whole supply chain is boom-bust. EVs are no different than conventional ICE vehicle industry, notoriously cyclical, especially in a high interest rate environment when most consumers borrow to finance their vehicle purchases. Many second and third tier EV makers and battery makers in China are going bust, but their inventory of battery cells still have a market, which they have been aggressively selling into, which has slowed the need for new production for a short period of time. But you can only deplete inventories once. As I'll show shortly, demand forecasts are no different today than was forecast a year ago, and supply should struggle to keep up. Two singer-songwriters inspire today's narrative, having just seen them both in New York City in the past month. The first is Neil Young, who I saw in Forest Hill Stadium with my friend Erez Ichalov, who will be on the next panel. Neil is no longer young, like most precious metals investors. I'll be a miner for a heart of gold. Keep me searching for a heart of gold, but I'm getting old. Gold is old, but proved a safe haven over the past year, with the gold proxy ETF GDX up 12%. Equity proxies for copper, uranium, aluminum, oil and gas, steel, iron ore were up 10 to 50% over the past year, compared to lithium proxies SQM and Albemarle down 30 to 40%. And yet, there's Erez right there in the picture. And yet, I'm keeping... And yet, I'm keeping the faith that Neil had greater vision when he sang in After the Gold Rush in the 1970s, 50 years ago, "Look at Mother Nature on the run, flying Mother Nature's silver seed to a new home in the sun." That new home, Neil, is lithium, which rhymes with optimism. In the past year, I've come to appreciate the music of Dua Lipa, who just released her third album. Dua means love in Albanian. Dua Lithium, love lithium, radical optimism. Demand is set to triple by 2030 to 3 million tons per year, from 1 million tons last year. Crazy Horse Lithium has been the top performing commodity 4 times in the past 10 years. It has also been the worst performing commodity 4 times in the past 10 years. Observe the strong lithium equity bubble correlation in the chart to the left with the lithium carbonate price since Tesla's Battery Day in September 2020. Last April's bottom and bounce turned out to be a bull trap. Q4's capitulation resulted in January's despair. $850 spodumene saw Core Lithium mothball its mine in Australia. Spodumene has since bounced nearly 50% to $12,500 in some recent auctions, but has leveled off in recent weeks, as has the lithium carbonate price. The world's second largest producer, SQM, just reported record sales and continues to ramp up their low-cost volumes. Their deal with Codelco will ensure growing volumes. So what will reversion to mean actually mean in terms of lithium prices? The waiting is the hardest part to channel Tom Petty and the Heartbreakers, as perfectly encapsulated in this meme I reposted from Paolo Rojas last week. Those who have successfully traded Crazy Horse Lithium can appreciate it's better to have loved and lost than to never have loved at all. Only love can break your heart, said Neil Young. Dua Lithium. Love lithium. I prefer. January's consummation of the merger of Livent with Allchem has transformed both companies into Arcadium. We interviewed for Rockstock channel on YouTube CEO Paul Graves, who is the most articulate commentator on lithium market developments each quarter. He is making a concerted effort to talk more publicly and increase transparency in what remains a very opaque industry. Quoting from his Q1 quarterly commentary, there's a lot of good lithium news on the demand side. Global EV sales are up 20%. In the past quarter, there were as many EVs produced as in the entire year in 2020, according to the IEA. Q1 China sales were 2 million units, up 32% year on year. At the Beijing Auto Show, there were 287 new energy vehicles, 80% of all cars on display. In terms of demand forecasts, while battery EV sales are expected to be 20 to 30% lower in the next 2 years compared to last year, plug-in hybrid EV sales and plug-in hybrid battery sizes are growing, and energy storage is growing faster than EVs, which translates into 2026 demand that is no different than forecast last year, and that by 2030, lithium demand will be 3 times that of 2023. The market in 2023 was 1 million tons, 2030 is 3 million tons. So where will 2 million tons come from in 7 years? As for supply forecasts, Paul suggests 2024 and 2025 are overstated by many analysts. A number of bank analysts forecast volumes higher than what producers have publicly stated will be their volumes. And importantly, there's a big distinction between overall aggregate lithium demand and what is actually battery qualified material, which he thinks will be in shortage. Arcadium and his peer Albemarle both suggest that to stand up new capacity to serve ex-China markets, lithium chemical pricing needs to be closer to $20,000 a ton incentive pricing. That's up about 50% from today's $14,000 price. Dominating the lithium narrative for the rest of this year will be the greatest show on earth, the US presidential rematch between Biden and Trump. Elon Musk is injecting himself into this dialogue. RK Equity has parroted Benchmark Minerals' battery arms race narrative for years, that the commanding heights of industrial power, the global transport and power industry, hangs in the balance as the world shifts to better, faster, cheaper EVs. And battery energy storage solves solar and wind power intermittency issues. Build Back Better Biden's bipartisan infrastructure law, the CHIPS Act, and the Big Bazooka Inflation Reduction Act focused on scaling energy transition technologies. It is China-style industrial policy that in many ways is meant to answer China's Made in China 2025 and Belt and Road initiatives. But China has a 20-year head start and has thought very strategically and intelligently about every aspect of the supply chain. China CapEx and OpEx are much lower, not so much due to low labor costs, but because China has hundreds of thousands of people with advanced technical know-how to do these things. And they're willing to invest and operate in countries the West doesn't want to touch. And everywhere they work fast with exceptionally strong work ethic. And they're willing to work for lower profit margins. We have argued that upstream raw materials will be a key bottleneck, that supply of lithium won't be able to keep up with EV and energy storage demand. But here we are in 2024, 1 year from Made in China 2025. And due to China's ingenuity, these materials and cathode and battery and EVs are largely in oversupply, and all are cheap. China is exporting great electric vehicles at $10,000, $15,000 price points. Many countries throughout the world that don't have big auto industry jobs to lose are happy to be buying these Chinese vehicles over Western brands, like in Australia, Thailand, Indonesia, India. Can the US and Western Europe compete with China for electric vehicles? Have we simply just lost round one? Or is the energy transition to EVs in the USA and Europe not inevitable as it appeared just a few years ago? 5 months from a presidential rematch, Trump is leading in many polls with a platform which includes vilifying these Bidenomic policies with rhetoric that is substantially anti-electric vehicle. Major U.S. auto OEMs like GM and Ford, always trying to navigate shifting political winds affecting their industry, have walked back many of their aggressive EV and battery production goals and have pivoted more toward hybrid vehicles this year. Ford chairman Bill Ford told the New York Times, "Our planning timeframe as a company is a lot longer than one election cycle. When we're whipsawed back and forth by politicians, it becomes really difficult for us." Consensus is that Trump would take away consumer subsidies for EV purchases. But consensus is also building that he will keep production tax credits. Will he really want to induce widespread layoffs in the red states that have attracted hundreds of billions for new battery and electric vehicle plants? Tesla Texas is MAGA. Trump met Elon Musk in March and said, "I've been friendly with him over the years. I've helped him. When I was president, I helped him. I've liked him. We obviously have opposing views on a minor subject called electric cars. I'm all for electric cars, but you have to have all the alternatives also." Trump respects billionaires, entrepreneurs. Elon reinstated the Orange Man's X account. New details of their March meeting emerged last week. Elon and many of his Silicon Valley billionaire friends like Peter Thiel and David Sachs and journalists like Tucker Carlson are very publicly anti-Biden and quietly supporting Trump by various means. Billionaire Wall Street icons Bill Ackman and Steve Schwarzman have also spoken favorably of Trump and against Biden. Trump is very focused on winning. It's hard to imagine he would not be persuaded by Elon and his ilk not to cede future technologies and industries as important as U.S. auto manufacturing to China. It would be like betting on the horse and buggies as the world transitioned to the Model T Ford in the early 1900s. U.S. automakers fell behind Japanese companies in the 70s and 80s, but they got better after welcoming and learning from Japan and later Korean manufacturers who set up plants in the U.S. Trump has said he'd welcome Chinese battery and EV manufacturing inside the USA, but not simply allow them to set up shop in Mexico and import these low-cost EVs tax-free into the US. That's logical, and is also what his friend in Hungary, Viktor Orban, has done, embracing billion-dollar investments by BYD and CATL. Ford's proposed licensing deal for CATL technology should be no different than China forcing US auto OEMs into joint ventures so they can learn how to do it for themselves. Military applications also require the latest electric vehicle and battery technologies. By one estimate, more than half of the 36,000 casualties suffered by American troops in Iraq were on fuel and water resupply missions. Batteries and EVs will save American lives, just as EVs are generally safer to drive than ICE vehicles. So, while I'm not supporting Trump, I don't fear him if the collective wisdom of the U.S. electoral system reelects him, because MAGA is critical minerals for the U.S. military complex. MAGA is manufacturing electric vehicles and batteries and cathodes. And MAGA is processing lithium battery chemicals. And MAGA is mining battery critical metals. Tesla, Rivian, Toyota, Hyundai, and Kia plants in the U.S. is MAGA, as are Panasonic, LG, and SK. Trump will no doubt support U.S. oil and gas drilling, which will likely have the positive impact of lowering inflation through lower U.S. energy prices. It's not a bad thing. But he'll also support lithium mining and processing in Nevada and Carolina, and nickel mining and processing in Minnesota, Michigan, and North Dakota. Lithium Americas, Piedmont Lithium, Ioneer, Talon Metals is MAGA. 4 years ago, Tesla Battery Day, a big bear market in lithium battery metals ended and a major hype cycle began as Tesla unveiled massive growth and vertical integration plans. Tesla's sentiment has been weak much of this year as Q1 sales declined. Elon laid off 10% of its workforce, and the Tesla narrative is currently dominated by the June 13th vote on Elon's 2018 compensation plan. But for a major lithium demand surprise, I'm looking forward to August 8th, Tesla's Robotaxi unveil, and a shift to rumors, speculation, and hype. Tesla currently has capacity to build 3 million cars, but is only producing 1.8 million. In the Q1 earnings call, Elon quashed a Reuters report that said he was giving up plans to make a low-cost vehicle. And instead, he articulated a view that before the next-gen vehicle manufacturing plants are ready, he will be utilizing this spare capacity with elements of old and new manufacturing technology. What new models will be unveiled and at what price points will be a major focal point of the Tesla intelligentsia like this one from popular Tesla YouTuber Stephen Mark Ryan, who's suggesting 3 new Teslas might be on the cards. Will August 2024, ahead of Biden v. Trump, Part Deux, mark the bottom and sharp upswing in lithium battery materials as September 2020 Battery Day did the original Biden v. Trump matchup? Radical optimism. Deux Lithium. The lithium demand story is still intact. Lithium will grow 20% per year as far as the eye can see. But supply is certainly abundant, but it takes time and money to build. Supply is also lumpy, prone to boom-bust volatility, as is each other segment of the supply chain. EVs, batteries, cathode are all prone to boom bust. There are too many EV makers in China and too many battery makers. Classic economic theory applies across the supply chain. A sector becomes hot, attracts new entrants. Some make it, some don't. Those that don't cause inventory buildups. Same is true for lithium development projects. Our case scoreboard up here of 150 companies will no doubt shrink this year. But many, many new mines must get built. Which ones? Because lithium industry is still so small and growing so fast, it should not experience a 10-year nuclear winter dynamic like uranium experienced. It's hard to see a Fukushima-like moment for lithium. Does the much faster fall in lithium price over the past year mean a faster bounce than the last 2.5-year bear lithium market? A few sell-side analysts covering lithium over many cycles have called the bottom in recent months, but they're gun-shy and conservative with their near-term price forecasts. Others, like Goldman Sachs, see supply managing to keep up for the next few years, keeping a lid on pricing. One important thing I need to keep in mind and remind myself is that for most of my lithium investing successes over the past 15 years did not happen quickly. Much as I have sought in the last 2 years to replicate, my 10-bagger success in 15 months with Winsome Resources, I've spent much more time grinding it out with Piedmont Lithium and Lithium Americas and others over 5 or more years before those investments turned good. Our latest video with David Deckelbaum of TD Cowen took its cue from Guns N' Roses. Patience. Lithium is similar to other cyclical commodities. This is not a buy and hold on for dear life like technology growth stocks who build up real brands and real moats. Lithium equities get overbought and oversold. I see good value on the lithium equity scoreboard here, but things are not nearly as distressed as they were in September 2020 at the bottom of COVID, and there are still many stocks that look richly valued. Dilution risk is very real at many companies and may put a lid on equity prices on the next upturn. This slide lists all the lithium stocks I'm holding in order of position size, and also my non-lithium holdings. Thankfully, I diversified and had some uranium and copper and pick and a tiny bit of gold. Some of these stocks in lithium I've held for years, holding them all the way up and all the way down. But also, thankfully, several of them I have successfully traded over the course of Crazy Horse Lithium. Remember, I'm not a financial advisor, and nothing you're hearing here is financial advice, but I do like to be held to account, and this is what I'm showing here. This is a list of all the companies RK Equity has represented in the lithium battery material space for the past 15 years, and this is our corporate disclaimer. Thanks very much for listening.